Everyone. Hey everyone. So basically, I just saw this article on CNBC, so I thought I would jump on, review it. I know I've been going over some of the stats we've been seeing locally. It's time to see if the national news and our local news are matching up. So what I'm going to do, I probably should have read this article before just jumping on, but you know what? Sometimes that's not my style. Sometimes let's just go for it. So let's take a look at this article real quick. Title, of course, is concerning. This came out 21 minutes ago. Today is October 20th. Can't believe we're that late in the year. Existing home sales fall to a 10-year low in September as mortgage rates soar. Do we know mortgage rates are going up? We do. Do we expect that to slow down home sales? We do. So 10-year low, that's wow. So that's September. So that's not the October stat. So the good news is September's done. We can actually look and see if that truly happened. So let's kind of thumb through what this is telling us. Okay, sales of previously owned homes fell 1.5% in September. That doesn't sound that bad. Sharply higher mortgage rates are causing an abrupt slowdown. So sharply and abrupt, those words scare me, I'll be honest. Average rate of the 30-year fixed now just over 7%, after starting this year around 3%. So if they wanted to scare, they could say up, what is that, like 233%. That's big. That's not a pretty stat. I'm surprised they didn't throw that in there because they're using some pretty powerful words to get our attention. And of course, that is what the job is to get your attention. It's tough to get people's attention in this world. Let's see. Existing homes are selling at the slowest pace since September 2012. That's a long time ago. Okay, sharply higher mortgage rates. And again, I'm not trying to scare you. Don't want to beat this down, but I'm reading this article, right? Despite weaker sales, multiple offers are still occurring, with more than a quarter of homes selling above list price due to limited inventory, is what NAR ended up saying. So that they did go to NAR, and NAR said, hey, it's not looking like, the apocalypse. Tight supply continues to put pressure on home prices. Okay, that's interesting. The median price of an existing home sold in September was $384,800, an increase of 8.4% from September of last year. So, we know that prices have gone up a good amount. Prices are cooling. We can verify if that's accurate or not. They're falling harder this year, particularly on the lower end of the market. Let's see if we feel that our statistics are the same as theirs. Home prices between 100 and 250 dropped 28.4% from a year ago, while sales of homes priced between 750 and $1 million declined 10%. Homeowners love their 3% mortgage rates, and they don't want to give that up. Now, that I fully agree with. And I would tell people that if you're in a home in a very low interest rate and it's still working for you, take what's working, So anyways, so what these stats are saying is, hey, let's pay attention to the amount of home sales. So they may do it a little stronger, but that's essentially what they're saying. So now what I want to do is I'm going to switch over. And we went over this a little while ago, maybe last week. I'll just go ahead and throw my little face up on the screen. Hey. Okay, so anyways, let's look. They're using September stats. So on this screen, I had one thing that had June, July, August, September. Probably should have used that, but this is the latest one I have. In July, the number that sold was 55. In August, and this is under the 250 price point, 55, in August 55, in September 55. Okay, so we didn't see a big change in the amount of sales. Average sale to list price that sold over list price on average, 3% over list price on average, 1% below list price. So there's been a change that we got to see if that's a pattern or that's a month. Okay, going to the 500,000. Again, this is West Columbia and Casey we're looking at. 37 sales, 33 sales. September was 35 sales. So we're not seeing anything from the last few months. They're comparing this year to the previous year. So they are using a few different stats. And then the luxury in West Columbia isn't a large portion of the market, so we won't really focus on that. Lexington, we know Lexington, we'll just say it's hot. I mean, it has great schools. Inventory is extremely tight. We've seen good values and house prices go up, and houses sell fast. I mean, we know this. Under 250,000. 52 sold in July, 63 in August, 55 in September. So we actually had more sales in September than July. It sold, typically houses were selling above list price. September is the first time it slowed. So we're starting to see a pattern a bit of houses are starting to go a little bit below list price. So we are seeing a little bit of change, right? And I will tell you, the market is changing. I'm not here to tell you it's not. But what I'm trying to do is figure out, if I read an article, is it doom and gloom? And if it's doom and gloom, does that match what I'm seeing? And not what I'm feeling, but what I'm seeing as far as data analysis. Okay, Lexington under 500,000. We had a home sell, 123 sell in July, 138 in August. So again, August was a very strong month. 116 in September. And of course, you know, Septembers are typically lower because everyone's trying to close in July and August. But we do see that trend again as far as from August, the sales to list price went down some. And when we did mid-Octobers, we're seeing that continue on. Now, just so you can see, I did the mid-Octobers halfway through the month. Now, that report, real estate tends to lag in their data that's represented. And that's like right here, we have a half a month more data than they do. If we did 23 sold times 2, that would be 46, representing a whole month, right? That's a projection. So there would have been a decline in the number of sales. And if it's the same rate, around the same, just a slight decline in sale to list ratio. 35 times 2 would be 70. That would be a sharp decline in homes sold under 500,000. So that's the $250,000 to $500,000 price point. And again, 5 times 2 would be 10. That would be a decent amount of sale difference. And again, we do see usually in October less sales than August and September. Conclusion. What is our conclusion from taking a look at this stuff? What I would say is, you know what? I'm tempted to jump back on there. They aren't wrong. I mean, as far as the number of sales are starting to change. However, days on market, and they indicated that kind of quickly, houses aren't sitting on the market forever. And when they do go under contract and close, they're closing for around list price. Used to be more, you know, you'd get a sales price typically more than what it was listed for because there was so much demand. Now it's starting to creep. So now you have to get the buyer and seller to, you know, meet more in the middle. But that's where we're seeing right now. We are not falling off a cliff. We are still monitoring the market. And right now we have a CNBC article that we read and we compared it. And that's what we do. We want to make certain real estate is local, is what we're hearing nationally relevant to what we're seeing locally, or is it skewed? Which words are the powerful words they use? And then which ones are the ones that say, you know, well, that they say it's abruptly declining sharply, but then it's like down, you know, 1%. And it's like, okay, is that abruptly, sharply cliff, or is that 1%, right? I hope this helps. I will talk to you soon. Again, And you got my information below. I'm having it scroll so I don't have to keep saying it. Have a great day. Bye.